All right, let's get right into it. Today we're looking at a market DNA case study for the US100 index, and we're zeroing in on a specific period that the system calls cycle 5.
So what we're doing here is documenting a market cycle, step by step. The system gives this one the label US100_52, and everything you're about to see is based on its own proprietary method for looking at the markets.
Now, before we really jump in, a really important heads up. We're not making any predictions or offering any advice. This is simply a factual report, a play-by-play of the events just as the system recorded them, using only the data that was provided.
Okay, so let's start at the very beginning. It all kicks off with Phase 1, which is the initial setup. For this cycle, that happened on March 9th, 2026.
So this is what the chart looked like right at the start. The system flags two key potential entry points. There's a primary one, you can see it labeled M, and then there's a possible secondary one just below it, which is marked PC.
Let's dig into the numbers that define this whole setup. The primary entry was set at 24,244.2, with that secondary one at 23,680.9. Now, the system also has these unique parameters, something called a trapezoid time of 61 days, and another one called the third triangle domain, which was 5.44%. We'll see how these things factor in.
Okay, so based on those inputs, the system then generates a hypothetical risk scenario. Let's just imagine for a second, starting with $100,000. The expected max drawdown or potential loss was capped at 5%, which is $5,000. This whole calculation also gives us a hypothetical low price to watch for and a very specific trade size for each entry.
And this brings us to a really key part of the system's whole methodology. The source documentation is very, very specific here, so I'm going to read this next part to you exactly as it's written. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size.
From the get-go, the setup also identified three potential targets. You can pretty much think of them as price goals. T1 was at 24,317, T2 was higher at 24,901, and the highest target, T3, was all the way up at 25,457. Hitting that top target would have meant a 4.62% return in this scenario.
Okay, now this is where the story takes a bit of a strange turn. I mean, you'd naturally expect things to unfold in order, right? Phase 1, then Phase 2, then 3. Well, that is not what happened here. In this particular cycle, the event the system calls Phase 3 actually happened before the event it calls Phase 2. So let's walk through exactly how it played out.
So the very first major event that actually happened was the price reaching a point called apex N. And again, just to be clear, the system labels this event as Phase 3.
And here's the chart from that day, March 9th. You can see the price action right there. It hits that N level, which was the T2 target we were just looking at. So just to be crystal clear, on the very same day the cycle was initiated, March 9th, the price immediately went up and hit that apex N target of 24,901. Now this is a big deal because it means only that first entry from point M was active. The price never went down far enough to trigger that secondary entry at PC.
So after hitting apex N, what was next? Well, the next major event that the system recorded was something called mirror contact, which, as we've mentioned, is labeled as Phase 2.
So let's fast forward to April 7th, almost a full month later. This chart shows what happened. You can see the price came back down and just touched what the system refers to as the trapezoid lower boundary.
So to put a pin in it, on April 7th, the price hit 24,317. And I'll say it again because it's pretty unusual. This event, which the system calls Phase 2, happened after the event it calls Phase 3. A very interesting sequence for sure.
Okay, so where does all of this leave us? Let's take a second and just quickly recap the unusual sequence of events that we've documented so far. So to lay it all out, Phase 1 kicks things off on March 9th, but then things immediately went out of order. Phase 3 happened on that exact same day. Then, almost a month goes by, and on April 7th, Phase 2 is completed. And as of this documentation, the cycle is simply awaiting whatever comes next.
And that really brings us to the end of this particular record. The source material actually leaves us with an open question from the user who says, will the next phase be Phase 4? We are navigating the market to see what happens next. And that's where the documentation for this cycle concludes.
And finally, before we wrap up, a few very important disclaimers.
Please remember that this is for documentation purposes only. It is not financial advice. The system prohibits using leverage above 10. You should never, ever invest essential personal funds. And as we've said all along, we've only described the visible events with zero assumptions or predictions.